I want to bring on one of the world's youngest gold bugs, the Kobeissi letter editor-in-chief, Adam Kobeissi. So let's talk. By the way, you look fantastic.
Thank you, Charles.
You and Steve, man, you guys were in simpatico today.
We got to keep up with you.
You were talking about this you've been talking about this, though, as a driver for a long time, though, Adam. And it's not going to change. I mean, we saw in Japan where they said, hey, listen, you know what? We want to go for growth. We're going to try and grow our way out of the debt situation. Right or wrong, that's where the world's going.
Yeah, and look, the thing is, the one constant here all around the world is that the denominator of all these commodities has been in a constant downturn, right? While gold has been strong, and by the way, we might be hitting the 4,000 target on, like today. This is a target I've been talking about for a long time in the show. While the gold is strong, the denominator, the U.S. dollar, is on track for its worst year since 1973. So I think what's really happening here, and in the background too, by the way, we have record deficit spending happening all around the world, by the way. And I think what's really happening here is the new textbook gold standard, no pun intended, safe haven trade has become gold and Bitcoin. And I think that theme is going to continue. It's been an incredible run where gold's up over 45% year to date. We may be due for a pullback soon, a little cool down. But I think we'll see 5,000 gold in the near future.
Let's talk Bitcoin, because you've been talking about this too, right? Bitcoin has a market cap $2.5 trillion, but that's almost 24 trillion less than gold. In other words, gold has a 10.5 larger times than Bitcoin. So essentially, you're saying that this is just even the beginning for Bitcoin potentially.
Right. So this was a post we put out this weekend, and obviously, you know, like there was hundreds of comments. It was all controversial. But the point here, it wasn't even necessarily that we're saying gold or Bitcoin will surpass gold one day by market cap. It was more to say it's gotten so big, but it's still relatively small compared to other safe havens. Even silver is still larger than Bitcoin by around 10% by market cap. And I think right now you're witnessing this wave of deregulation in a lot of the largest economies in the world, with the U.S. kind of leading that charge. You're witnessing institutional capital now starting to look at crypto. 401ks looking at crypto. That kind of stuff even 12 months ago today was not happening. So it's a very strong theme that you really can't fight.
No, listen, don't fight any trends right now. The money supply, though, right, hit 305%, you know, at the highest since 2000. It obviously, it has the money goes somewhere, and a lot of it ends up on the bottom line of corporate America. Again, you know, market folks like it, traditional folks who think the economy, you know, at some point we need to pull back. Where do you see as far as the broad market is concerned with all of this?
Absolutely. So look, M2 continues to grow. Money supply continues to grow, as you said. For equities, this is great. I really think that we have much more room to run to the upside, especially as you look further out, especially as you look at multiples. A lot of these large cap tech names that everyone's calling a bubble, they're actually getting cheaper on a forward multiple basis. And also, couple this with now you have interest rate cuts coming into what looks to be moderate stagflation, right? Employment is obviously declining, unemployment is rising, and inflation is heating up. 60% of CPI components are now running above 3%. That was the last time that happened was in 2022 when we had that last inflation spike. So I think you couple this all with the money supply situation. Nominal asset prices are going to continue rising. Real asset prices will rise too, as the AI revolution and CapEx spend is so strong. But nominally speaking, the search for yield and assets that just defend against this baseline level of prolonged high inflation is going to continue. And I think that'll drive everything higher. And that's why I've been saying own assets or be left behind, and that's also why the wealth gap is going to continue to broaden in the U.S.
And of course, we got the Google searches for AI bubble. You're not concerned about that just yet.
No, so we're not calling this a bubble again, especially on a valuation perspective. And to the people that are calling it a bubble, what is the alternative, right? Like you're looking at valuations, they're not where they were in 2000 as far as on a forward basis. You're seeing remarkable runs in stocks. If you completely sit this out, and a lot of institutions did this in the early part of this year, now they're chasing the rally, you're missing out on a generational run. And if it is a bubble, we're still producing the biggest technology since the internet. The internet was a massive wave, even though it was a bubble. And I don't think AI is really going anywhere. You just have to be in the right places and the right names. And I think there's a lot more room to run here.
Great stuff, man. You've been absolutely killing it.
Thank you, Charles.
Great seeing you. Always great seeing you in the studio. Thanks.